Oh yeah, so I'm kicking this one off, taking Cesar's job here. So welcome to episode 73 of the Miami Tech Pod. Really, really excited for this one. We got my guy Jake from Coinfund, and I got to give you props, Jake, because again, when we were just a little side project, hoping to make some noise, you saw something in us, and Jake was the first check in On-Chain Studios and Cryptoys. So I am indebted to you forever for helping us get going. So thank you for that, brother, and thank you for being here.
Yeah, thanks for having me.
Yeah, really excited. So we're gonna dive into a lot of stuff with Jake. I think since you run Coinfund, would love to get your state of the market. Right, we've had a huge, 2021 was a huge run up, incredible bull market. A lot of people made a lot of money, and now obviously there's been a bit of a correction. A lot of people consider us in a bear market. What's your state of the crypto market overall, and your point of view? Would love to hear that.
And before that, what's Coinfund?
Yeah.
Thanks for asking. Coinfund.
I did a terrible job teeing up the entire episode. That's why I don't do that.
No, you're crushing it.
Yeah.
Coinfund is a firm that I founded in 2015. It is one of the first crypto and blockchain focused investment firms. So today we're a firm of about a little bit over 30 people, mostly in New York, a bunch of people in Miami, a couple of folks in Boston. We actually just celebrated our 7-year anniversary on July 1st. And what we love to point out is that 4.5 of those years were bear markets like this one. Mm-hmm. So we're quite used to this regime. The state of the market is that we've made, especially over the last 5 years, since the ICO boom of 2017, incredible progress in blockchain infrastructure. There was a moment when, Nouriel Roubini went in front of Congress and was like, blockchains don't scale. And for example, that problem has been thoroughly solved, technologically, right? Layer 2, alternative blockchain, zero knowledge rollups, all of this stuff. We are in a consolidation. These markets tend to go in a very cyclical manner. But every cycle, the money the capital is generated during those cycles, gets reinvested into the next thing. Right. So DeFi wouldn't have been a huge topic of 2020 if we didn't have the ICO boom, which everyone says was such a bad thing because of all the speculation and so on. And then we wouldn't have had the NFT inflection of February 21 if we didn't have the speculative boom in DeFi.
Right.
And so now we're kind of, back into a little infrastructure building phase in crypto. Yeah,
it's really interesting. I think a lot of people, they look back at the ICO days, and everybody talks about, the ICO days, it was such there was fraud and all these things going on. It was a bit of a bubble. But remember, the ICO days gave birth to things like Filecoin, for example, which is, an incredible platform. There's always going to be the outliers in each market. And like you said, right, there are big winners in each one. Obviously, the market has a good way of kind of, filtering out all the stuff that, is either BS or doesn't have product market fit or whatnot. And it kind of leaves the cream to kind of rise to the top and then create the next cycle, right? So it's every other cycle that comes, the bull market reappears and you're like, man, I wish I was able to be a part of that previous bear market where I could invest and have all those opportunities. I think that's how people should kind of look at it now. But again, I am biased.
I mean, I think one of the things that we've seen is also our bullshit filters are getting better and better. Right. The average, we're still not at average consumer being in this space from an investment perspective directly. Right. There's by proxy through Robinhood and Square Cash App or whatever it is, but I think we're starting to see more just automatic. What are the 3 questions I need to ask myself when I look at this to see whether or not this is worth dropping, my last check into, and that was completely not there in 2017 when every random shitcoin was being dropped, left and right. And a lot of those same shitcoin droppers then went and dropped NFT projects too, because it was I can get rich quick and I can generate a algorithmically generated PFP project in 10 minutes, right? Or hire someone on Fiverr to do it for me, But so I think we're getting better and better at, the average person being able to filter stuff out, and that'll be healthier for the ecosystem long term. At least that's my opinion.
Yeah, absolutely. But you're also seeing companies, mature a lot more. A couple of years ago, there was only early stage investments. There was only seed rounds. Now we're starting to see Series A, Series B, a little bit of Series C. These companies are in those stages because they're seeing product market fit, they're seeing revenue, they're getting customers. as of, it's not that long ago, but as of 2020, the DeFi summer of 2020 really proved that, hey, like blockchain protocols can earn fees, can earn revenue, and they can earn billions of dollars of fees. It was so funny to me, like 3 days ago on Twitter, there was this report, like Bank of America releases a research report and they say, wait a minute, actually blockchains are fundamentally valuable because they generate fees. And I'm like, it's been 13 years since they started generating fees.
It'd be a great indicator, like if you just mapped out the number of blockchain tech companies with HR directors, right? Like it's like an indicator of like maturity that, these aren't just like, 6 people hacking together projects. Like real companies are being built with that. And like with that comes real company infrastructure.
To be clear, one of the best companies in the space has like 8 people. It's like Uniswap, and they've generated. Well, it's
Is it really 8 people?
It was for a long time, and they generated billions in fees and revenue and markets, and like proves you don't need 12,000 people like Coinbase to build a product. You can build a cool exchange with a small, like very focused team. I wish I'd invested in Uniswap.
Yeah,
you still can't.
I know.
Jake, why don't you share, with the listeners a little bit about the portfolio, the companies that you all have made bets in that you feel really are just crushing it right now, and I'd also love your take on which one of those are, building kind of things that are not the obvious application of blockchain technology.
Yeah, that's a really good question. Well, so like as a portfolio, well, first of all, one thing to say is we're a multi-strategy firm. So we have seed funds, we have a venture fund, we have a liquid fund, and so we cover like most of the stages that are available in crypto. And we're also generalists, so we'll invest in Will's project, which is NFT toys, right? And then on the other side of the spectrum, we'll have stuff like infrastructure, as a service, like Blockdaemon or something like that. So we're generalist, and then we also invest in like the whole stack. So we'll do like infrastructure and consumer tech. What I've been spending a lot of my time on this year, as sort of the prices have been crashing, and when that happens, founders go heads down and they start building stuff. I've been spending a lot of time on still infrastructure, even though there's a lot more opportunities to go to market. We're seeing like more base layers. We're seeing more scalability technology.
Cross-chain stuff, right?
We're seeing interoperability.
Yeah.
Actually, so this is funny. And so you asked like, what is sort of not obvious? Interoperability technology this year has undergone like a 0 to 1 innovation. Like people have been connecting blockchains since at least 2015 when Consensus built a bridge between Ethereum and Bitcoin. And this idea of a bridge has been the way that most people think of blockchain interoperability. Now, what we've seen this year is Layer 0, Abacus, and these are like new generation interoperability protocols where you can send not just tokens across blockchains, but you can send messages. You could call a method on a different blockchain. You could read the state of a different blockchain. You can send an NFT, right? And what this does is it starts to connect all blockchains together in a way where the user doesn't any longer have to care about what blockchain backend they're on. They're like, I'm just on a website and I want to buy some NFTs.
Yeah.
That's it.
As that's our whole angle, right? Again, people won't care about that 5 years from now, 10 years from now. They just want to get something, consumer experiences.
So to me, this is like the 0 to 1 innovation that eventually will, and it's totally not obvious right now because whenever you go to like Rarible or something, there's a little drop down where you're like, pick the network that you want to be. Or when you go to Uniswap, there's like, there's that drop down, and so on. Once we can get rid of that drop down, and users can just use the thing, that's going to be huge.
It's the moment where like, telecom companies said, all right, we're just going to start completely connecting all of our users together and like through mobile. And we're going to have, data sharing agreements, and we're going to, essentially standardize.
Yeah,
exactly.
Yeah, that's what's happening.
Yeah, no, I think we're still a few years away from like everything being magic under the hood. I think we're still getting over the phase of technology for technology's sake, where the hype was around whatever, trendy buzzword you were using that week to build your company. And I think like Will and I, we've all talked about this. Like, I love that you guys are abstracting the technology layer from the end consumer, because the end consumer at the end of the day, they don't give a shit if their phone is CDMA or GSM or whatever, LTE, 5G, like that's basically a marketing layer for some of these companies,
And if you look at like all of the really big companies that have been successful in crypto to date, essentially all of them have done what Will is kind of doing, which is that they kind of bridge the gap between crypto world and traditional world. If you look at like NFT space, right? It's very impressive. Like, we're doing a lot of GMV. 2021, we did something like, I don't know exact number, somewhere between like 30 and 60 billion of GMV that year, which rivals global art sales in the previous year.
That's crazy.
Right?
Yeah.
And that's just with collectibles, in-game assets, and digital art. But if you look at the facts of like who's trading them, it was still like just tens of thousands of enthusiast wallets. It was not mainstream users. So to your point, Brian, like there's still so much work to do, which is the work that Will is doing.
Is that the reason for very abrupt market corrections? Is that you still have a concentrated amount of people holding assets?
Well, I think it's the behavior of those people. It's like, if everyone just, as they say in crypto, hodled, if they held it long term, then maybe you wouldn't see it. But what you see is a lot of speculation. And so people, tend to like buy up a bunch of stuff, then like flip it, de-risk it, and only keep sort of the core assets that they think will really make it long term, like CryptoPunks or Bored Apes or whatever it is. And so I think that's part of the problem. But you're right. If there were more more like market participants as well, then I think there would be maybe like less volatility.
Sure. I'd love your take on some of these, Fortune 100 companies like diving in to some type of connection to blockchain technology into their product stack, right? Like you've seen, I think we were just talking about Starbucks and Instagram and a couple of these companies that are really leaning into this space. Like, is that net positive for space?
I think it has to be, right? Because everything just runs on like a narrative of how accepted is blockchain. And like yesterday, we saw BlackRock add, essentially Bitcoin trading to the Aladdin platform, which is huge, right? It's a huge signal. Every institutional investor who trades assets on public markets, they're going to, that's going to create an impact for them, even if they're not customers. Like there's a narrative there that this is now acceptable. This is no longer for drug addicts and dark market participants and
we're past the Silk Road stage of,
so I would say like every little bit helps. Not all those companies make the best choices of like technology.
I was gonna ask, like, is some of it lipstick on a pig, just kind of like, hey, we want to show the world that we're relevant and or
definitely
is
like
it useful? Like
definitely have seen a little bit of that, but of course, like kind of the main candidates for stuff is Bitcoin. That's for like the traditional investment world. They're like, we're going to start at Bitcoin. And then when people are doing products, like for example, when Twitter integrated NFTs into their profile picture process, right? That's Ethereum. That's like the go-to smart contract platform.
I think it definitely is a net positive. From my perspective, if we call this Web 3, right? Web 1, Web 2, Web 3, right? And we look at like, this is not new. Brands lean into new technologies all the time. You look at when the internet was invented, right? And like the consumer internet started, let's say in the 90s when a lot of people came online, how many companies leaned forward but got their stuff wrong, right? And then when the social web came about, how many people and companies had failed social media marketing campaigns because they didn't really understand it, but they learned, they refine over time, it gets better and better. Same thing's happening with Web3 with a lot of these like NFT deployments. Brands are leaning in. Some are going to get it right, some are going to get it wrong, but they're going to figure it out, and the next iterations will be better and better. So I think it's totally a net positive, and it's just part of the cycle.
So you guys have looked at like Flow blockchain
Yes.
for stuff. How do you feel about that blockchain? Because it's kind of a contender,
Yeah.
a competitor to Ethereum.
So
in
the
some
reason
ways.
that we chose Flow is we felt it was the most consumer-friendly blockchain experience offered. I think what Dapper Labs did with NBA Top Shot, and I credit Dapper Labs for kickstarting the entire bull run in the NFT space in 2021. Remember, we started chatting
that
about
was it.
right. It was Top Shot. It was Top
Yeah.
Shot all day,
It
and
was
the
Top
reason
Shot.
and the
I'm
reason.
still mad at Johnny for not telling me about Top Shot 6 months earlier.
Yeah.
So Top Shot, the reason that was so successful is they took a lot of sports enthusiasts, a big name with the NBA, people that were into fantasy sports, people that loved the NBA, and gave them an easy on-ramp into the world of Web3, NFTs, and crypto. You didn't have to set up a MetaMask wallet. You didn't have to know what cryptocurrency was. You didn't have to know what a gas fee was. Take out your credit card, a normal user experience from buying something or consuming something, and participate. And then, yes, people got introduced to Web3 and NFTs, and they dove deeper into different blockchains and set up a MetaMask wallet, and then Bored Apes came about and whatnot. But to your question, Jake, Flow to me represents really seamless consumer onboarding, easy to get people involved. Kind of takes away a lot of the issues and the barriers that people do see in the space, whether that's financial barriers or technical barriers, setting up wallets, dealing with all this stuff. And then I back to Jake's point, I truly believe that in 5 years from now, people aren't going to care what blockchain they're on. I think to consumers, mainstream consumers, 3 things matter in the world of NFTs. Number 1, is the user experience phenomenal? Right. Number 2, are my fees incredibly low? I don't have to deal with absorbing gas fees or anything like that. And 3, do I have true ownership and liquidity of these assets as you say that I do? And if you hit those 3 things, the blockchain doesn't matter. But you got to get the user experience, you got to get the liquidity right, you got to keep the fees low if you have any chance at onboarding the millions of people that people are after from a Web3 onboarding standpoint.
So the third point you made of like the ownership and all
Yeah.
that stuff, right? So
That's
one
the
of the
premise,
popular projects out there, Moonbirds,
Yeah.
changed the sort of like rug to everybody, so to speak,
Mm.
right? By changing the terms of service after the fact.
That's
Like,
interesting. Yeah.
Do you think and Kevin Rose has been in the space for 20 years. Like he's a sort of like pseudo celebrity or a celebrity, whatever, in tech, right? Do you think that we're going to see more of these types of like changing the game as far as like what was the original value proposition that you thought you were buying versus what you have now? Or is this going to like backlash on him and on that project? And if you're an investor in that project, feel free to like recuse yourself,
I'm not personally an investor there.
Yeah.
I just think that people are constantly evolving that
Yeah.
model, right? Like I think Bored Apes was one of the first
Yes.
ones where they did that CCO thing,
Mhm.
and then my wife is really into World of Women and that whole community, and
Yeah.
like they have a CCO.
What is a CCO for the
So
listeners?
it's basically the fact that like when you buy the NFT, you actually are also buying the rights to that, I guess image
Right.
or intellectual property. And prior to that, CryptoPunks didn't do that, right?
Mhm.
Like their parent company retained the rights, and then it would actually sue people for creating like derivatives of punks and things like that. And the space really didn't like that. They didn't feel like it was a crypto or NFT
Was in the
ethos.
yeah.
Yeah, ethos is a big consideration.
Well, you talked to Jordan about this on the Doodles project, where
Yes.
he said, the future is some type of hybrid there.
Right. I agree. Because with Jordan and I, both of us, Doodles and Cryptoids alike, we are building new media properties, so you want to have some kind of hybrid where you give people the rights to do a lot of different things with their assets, but at the same time, you're building lore, you're building narrative, you're building a media property at the same time. So yes, we're all experimenting, to Jake's point. We're all trying to figure this out, right? Bored Apes has an interesting structure. You own the ape, that's yours completely. Do whatever you want with it.
Yeah.
Now what Proof and Moonbirds are doing with CCO is basically like you can take someone else's Moonbird and still do whatever you want with it, which is not kind of like what the Bored Ape. So there's like a difference there, and everybody's finding nuance. Now all the Bored Ape holders that are also Moonbird holders, they don't like the fact that it went CCO. So you're dealing with all these issues, but it's super fascinating to see the pivots happening in real time.
So I'd love to get your take
Yeah.
on this, because one of the kind of, I thought, potent criticisms of Bored Ape
Yeah.
CCO was the following, which is that, it's cool that you're getting the rights,
Yeah.
but there's no guarantee that like once you get your ape and then you open up your like ape restaurant
Right.
or whatever, based on this IP, there's no guarantee that you'll make money, right?
Right.
And so it's almost like the issuer has kicked the can down the road of
Right.
monetization and charged everybody a premium for the rights
Mm-hmm.
in anticipation that they would make a lot of money,
Yeah.
but who knows if they will. So do you think it's like a viable model? Is my question.
It's super interesting. I think it did a lot to empower this next wave of NFT holders. Like it kickstarted with the NFT boom right after Top Shot, and then Bored Ape kind of took it to the next level. It was this really new, fresh, and exciting thing where like if I had this, I could do whatever I want with it. I don't know necessarily in the long term how sustainable that is from a business model perspective, because I do think a part of this is going to start to fizzle out a little bit. Like you saw, like somebody took their Bored Ape and made Bored and Hungry out of it. They made a fast food restaurant out of it.
I think the restaurant already shut down.
No, it didn't.
I think it did.
I don't think so. And anyway, it doesn't matter if it did or not.
Yeah.
But I think that was novel.
Yeah.
But I do
Yeah.
think it's starting to get like now it's not going to get as exciting because you could see a bunch of them down the street. So
Yeah.
I don't necessarily think in the long term it's going to be as fresh as it was early on. But I do think that there's a lot of interest behind that. If you want to like galvanize a community and get a lot of people behind you, I think it's a great way to get started. But I think there's just as much benefit if you do it right by creating really incredible IP, building lore, building storytelling in a traditional media sense, and doing this hybrid model of giving people some of the upside of doing that extremely well, which is why I think you're seeing a lot of projects in the NFT space really prioritize storytelling. Like you look at like Jenkins the Valet and like interesting stuff around that. I think that's going to be a big part of this next wave is storytelling, like traditional media approaches, gaming. I think that's really what's going to bring NFTs into,
But like
next level.
To Jake's point though, like there was this sort of like carrot dangled of like, oh, you could make millions off of the IP of your ape or your Lambo frog or whatever stupid thing is, right? But like the problem is like when you have that carrot and you're dangling it, there needs to be people who want to eat that carrot, right? And like Burger King isn't going to come over to you and say like, hey, I want your specific ape and I'm going to pay you royalties for every hamburger that we put the ape on the wrapper or whatever, right? For them, they could just go and have an artist design them a new caricature, right?
That's why I think
there isn't a built-in sort of like cultural significance. Like maybe if you were like licensing Eminem's ape or Snoop's ape or something like that, maybe. But like, I don't know. I'm not sold that that's a real value proposition until there's a liquid market with people actively seeking this.
the problem with that model is, again, you're dealing on cultural relevance and you're betting everything on cultural relevance. And consumers are fickle and there's always something new and something jumps the shark pretty quickly. And eventually people are on to the next thing. And you run the risk if all of a sudden, for whatever reason, and I have a decent amount of capital invested in the Yuga ecosystem, so I hope it doesn't happen. But at some point, if culture decides it's not cool anymore, the whole thing has to, that crumbles and the financial incentives kind of go down along with it. So I think, again, you have to have this hybrid.
But do you think there's also this like longevity value? It seems like things that are maybe like longer in the space, like people always say like crypto punks are a good investment because
I do think because of that they were one of the first. There's the provenance to it. Just like if this is going to be like the next wave of art, which a lot of us believe that there is, this becomes like the Picassos of the digital space, right? So I do think that there's historical significance is always something you should really bet on because that could be things that withstand if someone thinks it's cool or not. The fact that is historic.
That's why I kind of love Nouns. I don't know if you guys know Nouns.
Yeah.
It's nouns.wtf is the website. But I think they're going to have their 1 year anniversary this month. And what I like about them is that in their model, they take all of these all these ethers that they collect at their auctions every day. They put it into a central treasury, and then that treasury is there to just fund the proliferation of this brand.
Right.
And that treasury has been up close to like $100 million, right? And so it can go for a really long time.
That's really cool.
To your point on cultural relevance, like the way to keep it relevant is brand building, right? It is actually spending a ton of money on brand marketing where you don't see the exact ROI on every single dollar because you're not like measuring, like the metrics aren't super clear, but over time you're building that awareness that like just keeps the thing floating, right?
Yeah. Yeah, I agree. Jay, curious to get your thoughts. You see so many projects, and I think NFTs it's a great topic to stay on because especially Miami has become like a little bit of a NFT Web3 hub for so many reasons. But like, what do you see as like the categories within NFTs that you really see are going to kind of unlock the next wave, right? Because a lot of people make, projects for the sake of making projects because they want to make money. But what are the categories that you feel NFTs have a real use case and future for?
So I've always had, like, if you go back to our blog, like you can rewind a few years and we've posted our thesis, which is that essentially like most of the NFTs you see out there today are these three use cases. It's in-game assets, art, and collectibles.
Yep.
But in our thesis, we see NFTs as just like general financial technology for non-fungible goods.
Yep.
It's kind of boring.
Yep.
But your question is, what are the next non-fungible goods? So the really exciting ones are the ones that tokenize assets that we've never really tokenized before. We've never enabled them to trade on secondary markets, in other words. So, for example, Mirror.xyz right now is creating NFTs around blog posts.
Super cool.
And this is insane, right? Because how many, blogs out there are there?
Yeah.
Like billions.
Yeah.
And what percent of them have been monetized? Like 1%.
Right.
And how has it been monetized? Well, it's always through this advertising model.
Yeah.
But in fact, like every individual kind of freelance writer will tell you that like they don't make money off of writing.
Right.
They'll say things like, we'll post our blog posts and then someone will hire us as a consultant, and that's how we make money.
Right.
And so the fact that we're creating these new business models and we're tokenizing something that is really big but hasn't been traded before, I think is huge. And then of course there's the more quotidian, like, oh, let's tokenize real estate, let's tokenize like ownership of your car. Those are huge markets. There's tens of trillions of dollars of addressable market there.
Absolutely. I think, again, obviously I'm bullish on games and collectibles because it's what our project and company is founded on. But I think some really interesting use cases that a lot of people that aren't like bullish on NFTs can really understand is like proof of authenticity, right? You want to sell, like, for example, Rolexes, right? And I saw Tiffany's is getting into the space with some interesting stuff, right? But it makes a lot of sense, right? Rolex is a huge secondary market, a lot of fraud in that market, right? What if Rolex issued a 1-to-1 NFT for every single Rolex that they make with the exact same serial number on the metadata? You would never have to buy another Rolex ever without the associated NFT that gets transferred along with it. And I think like that's obvious. It's an obvious use case that everyone can understand.
So
how powerful that is.
I'll push back on that.
Okay.
Why does Rolex need to do that on the blockchain?
Because you could.
Everyone trusts the brand. So if Rolex wanted to and run that database centrally, they could, and they wouldn't need any specific. They could do it on Postgres, Mongo, whatever DB tech they wanted.
The reason is behind provenance and the fact that Rolex, it's so easily counterfeited across so many people and counterfeited very, very well. So what provenance allows you to do, and it's immutable, is to see this certificate of authenticity was issued by Rolex to start, and you can see everywhere that it's gone since then. And you can't do that with paper certificates of authenticity. They can be easily forged. So
no, but I'm saying what I said was a database.
But how do you...
Databases can be copied. Databases can be hacked. You want that immutability. You want, again, that provenance.
How do you
Jake,
link...
I don't know if you have any other perspectives on that.
Well, I just generally don't believe that people have that kind of psychology. Like why do I need a car if I have a horse?
Right.
It's just not how people like tend to, deal with technology.
Sure. And I wasn't saying this from a like blockchain tech isn't an advancement in certain directions, right? But what I'm saying is this goes back to like the concept of trust, right? And that was one of the foundational sort of features of blockchain, right? That we don't trust the central authority to manage the data and to ensure that it's accurate or ensure that it's not tampered with, right? But we trust centralized authorities all the time with data, authenticity and stuff. And none of those, and many of those things have nothing to do with blockchain.
So I'm going to invoke like biology here for a second because I just read the network state last weekend and I was like listening to his podcast. But he had this really good point. He said, like, if you kind of zoom out, for the last like maybe century or so, the trend has been actually towards centralization. So when we went from like basically like city states to to nation states, we got like, why did we go to nation states? Because we got these huge economies of scale, and we were able to scale government, and we were able to create huge returns on scale. And what he's saying is that now that we have digital technologies and the internet and computers and blockchain, all this stuff is moving faster than those, kind of traditional technologies, which are governments. And now we're getting negative ROI on that model. And so now the trend is like toward decentralization. So, I mean, like, to go back to why do they need a blockchain? Like, I mean, you made some great points. But I think, like, overall, it's because they're part of this trend where people are going away from centralized authorities, and they're just like, we want digital stuff that outlasts individual companies. And I actually have a story like in this space, which is like so interesting. So in 2019, we funded this project called Additional, which was basically one of the only places where anyone could mint NFTs at that time. And so a bunch of artists went on there. They started a community, and they call themselves like the Additional Artists. And then the company like pivoted out of crypto completely. Like, they weren't seeing enough revenue. They're like, we're gonna go do something else. And so the app went away, but the community and the assets remained. And to this day, I'm in a Twitter group with these people who have this identity of like Additional Artists, and they go around like collecting these like old NFTs, and I don't know, it's just fascinating.
Jake, you moved from New York here?
I did.
Why? What was that? What was that decision like? I'd love to just get some insights into how you're liking living in Miami, and it is the MiamiTech pod after all.
Well, I'm throughout my life, I'm like an early adopter of stuff, which is why I'm in blockchain, which is why I learned how to code when I was 14, etc. And I wanted to test the thesis that like Miami was going to be this new tech hub, and in particular with a focus on crypto.
Sure.
So I made that bet. We moved here. I'm actually running a meetup, a monthly meetup with my company Coinfund, which is called Rabbit Hole Talks Miami, where we have entrepreneurs come in and talk about their crypto projects. And what I'm seeing is that this community is developing rapidly in that space. I think, Will, you were the one who told me like 10 years ago you couldn't be a tech founder in Miami.
Oh no, and they were right alongside me. We've been here for the past we've been here basically all our lives. So yeah, we got laughed out of rooms across the country, but like, Miami, no way, never gonna happen. So. But
now it's quite different, right?
Yes, very different environment.
So we see like way more investors have moved here, including some famous Silicon Valley people. I think Andreessen just said that they're gonna have an office here. Obviously, our firm, paying attention to the crypto world. This is a great place. There's a lot of venues here where technology can take place and companies can have offices, and there's a lot of benefits to that. And it's...
What do you miss the most about New York so we can build it here for you? Just for you, Jake.
The pizza, bagels, and sushi. I don't know if you can...
I'm on it. Be right back.
And to be clear,
have you had Zach the Baker?
Yeah, of course.
That's solid,
It's pretty close.
I think what New York is good at is just having, there's like such a density of people. There's always like stuff going on in tech and in crypto. But I'm also seeing a lot of those folks spread out. And in fact, like there's a lot of portfolio companies that we have at Coinfund. We have something like 150 portfolio companies who have at least somebody who's hanging out in Miami.
Yeah, it's so cool. And you think it's growing?
I think it's growing. Yeah. I've seen the community like become more knowledgeable, more mature over the last year for sure. But there's a lot of work to do. Like, we need more actual like engineers being produced here rather than imported.
What we have this conversation a lot. We ask this question: what do you think the secret sauce to getting more engineering talent here in Miami would be?
Probably just like doing more with the universities and doing more programs. And like in New York, they have a lot of different programs where people like learn to code or they augment their skill set in web development, whatever it is, right? But I think like as a baseline, just the fact that, you know, Cryptoids is here or any other tech or crypto company is here, it creates opportunities for people to work and get experience. And that's probably like the best way that people will learn.
All right. Plug time before we wrap. What do you want your, you know, the MiamiTech pod listeners to be aware of? You know, what are you super into right now, involved in, that you just want to share with the community?
Please come check out our monthly meetup, Rabbit Hole Talks Miami. It's you can find it at coinfund.io. There's a page for community events. Check out our blog.coinfund.io. If you're building a crypto company, you know, follow us on Twitter, engage us, send us your deck.
Cool.
Awesome.
Awesome.
This is great. Thank you so much for taking
thank
the time.
you guys.
Thanks a lot, Jake.
Thanks, Jake.
Appreciate it.